value from success, growth in discovery. Golden Arrow Resources is a well-funded gold-copper exploration company with proven management and prospective properties in Chile, Argentina, and Paraguay. Golden Arrow trades on the Toronto Venture Exchange, symbol GRG, on Frankfurt, symbol G6A, and the OTCQB, symbol GARWF. For more information, visit us at goldenarrowresources.com or call Sean at 778-686-0135.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Mark Leibovit, editor and publisher of the Leibovit VR newsletters, also known as VRTrader.com. He was the #1 U.S. stock market timer in the January 2020 edition of Timer Digest. He's speaking to us from Arizona. Welcome back to the show, Mark.
Thanks for having me back. I don't know if I'm going to make Timer of the Year for 2020 or not. I'm on the list, but, we only have, another couple months here, so I hopefully I'll be somewhere in that top 10, but we'll find out by the end of December. You can't be in the #1 slot every year, but we're doing our best.
The U.S. dollar, is it on its way back?
Well, I like it. I'm long. I mentioned this in the previous interview, and our clients are in. I don't know if it's just a nice technical rally or something more substantial. I know the gold bugs have been worried about it, commodity players, because of the inverse relationship there. But I'm short-term positive and will remain so until the recent lows come out or I see some negative, trading action, negative volume unfold. So I would say, for the time being, I'm staying long the dollar.
What does that mean for gold?
Well, I don't like tying markets together, and in this particular instance, they seem to be working inversely. There are times when stocks and gold go together, dollar and gold go together. Other times they go inversely. You can show different times in recent years where those patterns emerge. So to lock yourself into a scenario that says, well, if the dollar goes up, there's no way gold can go up, is not necessarily true. And there is that relationship, and because it's priced in dollars, and I understand all that. But again, it doesn't always work that way. So, but for the time being, the street seems to feel that a stronger dollar is negative on gold. And we've had a minor uptick in the U.S. dollar, but gold got slammed here. I've been bearish on gold for the last, few weeks. Most of my subscribers know that. For our trading letter, we got out of gold and gold stocks, it's got to be a couple of weeks ago. And we do have a metals resource letter, one of our letters, and we sort of keep a, small core position in there because that letter focuses on that sector, but we're not heavy in it because we were concerned. In fact, in the letter, we pointed out the risks of a sell-off here and a pullback and all these models that indicate that there was even a possibility that 2020 could be a big high for gold based on some very long-term cycles, and in a sense implying that the big run that we saw to over 2,000 near 2,100 could have been a bull trap, and we'll know for sure by the end of the year if it comes roaring back. But there were some warning signs out there about gold itself, in the short-term time frame. So, bottom line, to answer your question, I'm sort of leaning to look for a buying opportunity in gold because a lot of people like it. There seems to be interest and momentum in the area. And, on a seasonal basis, gold tends to do better, from a September, October low into February of the following year. So there may be a nice tradable entry point. It might have been today. I don't think so, but, we're looking for another, trading entry point. My original thought was you need to wait a little bit, let September go by, maybe into middle October might be a better buy point. So, we didn't do any new buying, but, we're watching the numbers here. So I think there's a trade coming, whether it's a trade back to new highs, as all the bulls are telling us, that I can't tell you right now. There is definitely a trade, unfolding, and we're going to try to take advantage of that. So short term, still a little bearish on it here, waiting for a confirmed bottom. And I don't know if that came today or not. We have to look at our numbers tonight. I don't think so. But, we try to be flexible in the trading approach. And my overall comment was, to be careful in the gold market here during this current time frame, and to look for an opportunity to get long when the signals materialize.
Copper and other metallic commodities, are they on the way up?
The base metals and the ones that are involved in the growth of industry and infrastructure and so forth, those have done better. Now, like one particular name that we follow in the copper group, Freeport-McMoRan, that's sold off here with the markets. Tends to be a bit of a market stock, but it's mostly a copper stock, though they do have some gold holdings that held up a little bit better. I'm a little more positive on copper and the base metals because of the potential expenditure for infrastructure here in the U.S. And there are names like U.S. Steel or U.S. Concrete or Vulcan Materials, Marriott Materials, and so forth. These type of companies still stand to benefit no matter who's in the White House, because everybody seems to want to spend money on infrastructure. So steel, copper, aluminum, and so forth, I think are going to do better or more relatively stronger than most of the market. So even today when the market was selling off, I noticed some of these infrastructure stocks were up on the day, that a couple of names that I just mentioned. So it's a little more positive. So it's a different story. I'm not tying the infrastructure plays with the gold market. In other words, I'm not saying, well, if the dollar goes up or gold still looks bearish, you should avoid copper and aluminum and steel and concrete and all these other areas. I'm not saying that. Those could do better on a relative basis, in my opinion.
We'll have more with Mark Leibovit right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Welcome back. We're speaking with Mark Leibovit. Mark, I know we like to attribute certain things that happen in the market to certain physical things that have happened, but sometimes does the market just behave on its own? It has its own momentum up and down, and it really doesn't depend on what the news is?
It also depends on other, what I refer to, and a lot of people are, sort of scoff at this, what I call, the geocosmic aspects of the market, the cyclical aspects of the market. As far as, and we're going to address that in just a second, but market has its own life and anticipates things, but sometimes it could be controlled by, outside forces as well. There are cyclical patterns in the market. Looking at some very, very short-term patterns, for example, for years and years and years, I always write about quote-unquote turnaround Tuesday. It seems like if the market is up on a Monday, it's down on Tuesday, or if it's down on Monday, it's up on Tuesday, and we saw that pattern this week. And on my Monday letter, I said, well, we're down Monday, tomorrow's turnaround Tuesday, you might get your rally, and sure enough, we did. And this has been going on for decades, and I'm not saying every Tuesday does this, but it's got to be 90% of the time there's some type of, reversal pattern on Tuesdays. So, why does that happen? I mean, is it because everybody's programmed to release some news on Tuesday mornings, or is it just some, cyclical pattern in the market that people overreact on Mondays one way or another, and they have second thoughts by the time Tuesday comes about? So that's just one thing. And then you've got the Santa Claus rally, you got the turkey shoot, the turkey around Thanksgiving, you've got all these other, short-term patterns in the market that, seem to have some reliability. One of the great creators of and identifiers of those patterns was an old friend of mine, Yale Hirsch, who created the Stock Traders Almanac back in 1972. And if you get a copy of that book, it's not really like a book. It's just like a little almanac with, dates on it and interesting events that happen at different times in the stock market. Like I just mentioned, the turkey shoot or the Thanksgiving rally and the Santa Claus rally and all this cool stuff. It's real interesting reading how these patterns repeat themselves, and we follow those quite carefully. You don't turn on national news, financial news, and people saying, "Hey, it's Turnaround Tuesday." They don't talk about stuff like that, but it's there. It's part of the almanac. It's part of what you can see in repetitive patterns. And getting to the geocosmic aspect, I'm a big follower of that. And I'm not an astrologer, but I'm telling you, there's a lot of force with the seasonal patterns. For example, we write it and we talk about the equinoxes and the various seasonal changes that come in every quarter during the year. And September 21st, we wrote about this in August. You've got the equinox coming in at that time, and what happens? Well, we generally write within a couple of weeks of that. You get a change of direction in the marketplace, and sure enough, come early September, the market starts changing direction, and it's been that way ever since. You got another one coming up December 21st. You've got the big one in March. And of course, March this past year, what happened? The market had a huge bottom right during the vernal equinox. I incorrectly referred to the September date as an equinox, the solstice. So it's a solstice on the 21st of September, and it's an equinox in March. But these important time frames, and we post them, and we say keep an eye on March. Keep an eye on September. Keep an eye on the June period, just when you have the summer solstice comes in. There's sometimes change of directions in the market. So that's some of the bigger picture stuff we follow too, and we get into a lot more detail in other seasonal patterns that are for whatever reason they're repetitive and they do tend to work, and it's not necessarily exactly to the day. But we find that they have great power in terms of indicating near-term change of directions in the market. And why this happens? Is it planetary forces that forces people to do certain things? Is it gravity? Is it something else going on? Is it the force of the moon? And the fact that the moon affects our tides and affects the water that's inside of our bodies, that's just mostly water anyway. Just a lot we can question the reason why, but we've seen these patterns and identify them. We write about them in our letter. We also follow a lot of other interesting stuff, including, volcanic activity, earthquake activity on the planet, all kinds of interesting stuff that can affect weather patterns and affect the markets as well. So, I try to keep an open mind to a lot of indicators, Jim. I've been doing this for 40 years. And I find that if you just only watch the fundamental news or just follow the technical indicators along with it, and you exclude seasonal and other patterns, you're missing part of the picture. So, a long-winded response. We try to put it all together as best we can, and some years it really works out for us, as it did last year when we were the number one timer, and this year we made a pretty damn good call with our forecast model when we called in January for a big sell-off and to watch out for a low in March, and sure enough it came. So a lot of this was based on the kind of analysis that I've just described to you.
An Aboriginal chief friend of our family was able to predict how bad a winter would be by how fat or how much fat was on the skins of squirrels that he caught or other animals he trapped. And I found with my own cats, if they started eating extra in August, we were going to have a cold winter. Somehow the animals know.
Right. There's definitely other things. We've got to keep an open mind, open eyes, because what we've learned is that what we don't know is more than what we know.
We'll have more with Mark Leibovit right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway.
Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Mark Leibovit. Mark, the Fed has said it's not going to raise interest rates for 5 years, but doesn't the international bond market have more of a say on what happens with interest rates than central banks?
Well, the free market does, and sometimes the expression is the tail wags the dog here, and you have to watch what the free markets are telling you, and that's what they were telling you before the Fed started lowering rates here, and before the European group started lowering, Draghi started lowering rates in Europe, and definitely a supporter of that viewpoint, but. I mentioned this too before. I don't think these institutions, the central bankers, have done such a great job in making their decisions. I'm a big critic of what they've done. The Federal Reserve, in particular, here in the U.S., since it seems to be the leader, since it was created back in 1913 or 1914, has done more to destroy the value of the U.S. dollar than I think any other institution could have. So, have done not a very responsible job in managing interest rates or the economy, even though they're not doing fiscal policy, they're doing monetary policy. They've done a lot to screw things up dramatically in the last 20, 30 years. And I don't want to mention individual chairmen of the Federal Reserve names, but we've discussed this in the past. I mean, they just haven't done... They really don't know what they're doing. I mean, that's really the bottom line. I mean, I know it sounds, how can that be? These are economists. These are smart guys. They got PhDs. They know what they're doing. I think they know nothing really about managing the economy. They tend to react rather than prepare for the future, and they react to situations more than, look ahead and try to anticipate what needs to be done. And having central banks control rates, like you said at the top of your question, I think the free market needs to do that. Forget the central banks who have done more to screw things up than help things along.
Sure. Well, since they huddled up on Jekyll Island off the U.S. East Coast back in the early 1900s to form the U.S. Federal Reserve, our market historian Bob Hoy has pointed out we're now in our 19th recession. So much for managing economies.
You refer to the great book, The Creature from Jekyll Island, as well. And in fact, I highlighted that in my newsletter here the last couple of weeks. It's like I can't remember now, 500-600 page book. It's huge. I have it on the shelf here. It takes forever to get through, but it's a history of the formation of the Federal Reserve, and it's just a terrific document. And the result of reading that is it's an easy conclusion that we need to abolish the Federal Reserve, and it shouldn't have been created to begin with. But one day it will be, because it really has done a ridiculous job, and particularly with the way it's acting now, running between the Fed and the U.S. Treasury, running the printing presses ad nauseum. It just doesn't make any sense at all the way they're conducting themselves. So anyway, Creature from Jekyll Island is a great book, great way to understand what happened, the creation of the Fed, and very few people really know about the Federal Reserve, and it's really a federally chartered private corporation. The shares of the corporation, according to to that book, are owned by the banks themselves, the private banks. If you go to the Federal Reserve and go out in front and you talk to some of the employees out there, they're not federal employees, they're private employees hired by the private corporation of the Federal Reserve, so they're not really U.S. government employees. So it's really a private institution set aside, owned by U.S. banks, to do the bidding of the U.S. banks and to do what they think is best for themselves. So unfortunately, it's not the mom and pop apple pie institution that people think it is.
Sure, it's the banking version of what's good for GM is good for America.
Correct.
Mark, do you still have your special offer for our listeners?
We do, and I appreciate you mentioning it. We've had some, nice response to that, too. Our letters aren't inexpensive, so we try to offer a little bit of break for the people who wish to sign up on a monthly, quarterly, or annual basis, and if they use the promo code 2020 half off, 2020 HALFOFF, in the little promo code slot when you sign up for. There's several newsletters on the site, so whichever one you sign up for, when you get to the sign up page, there's a little spot for that promo code. If you enter 2020 half off, you get 50% off for that product for the time frame you've signed up. And thank you again for mentioning it.
Mark, thank you so much for being on the show.
Always look forward to it, Jim. Thank you.
My guest has been Mark Leibovit, editor and publisher of the Leibovit VR newsletters, also known as vrtrader.com. If you have any questions for Mark or any of our other guests, you can send them to info@housestreet.com, our YouTube channel, Talk Digital Network. Find us on Twitter @HoweStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HoweStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HoweStreet.com radio is a production of HoweStreet Media Incorporated.